Hi there, in this video I review an SPX core diagonal trade opened after a bounce from major put support near 7300. My name is Gery and I'm the chief options expert at TanukiTrade. The original idea was to capture a recovery move back towards the HVL while keeping risk limited with a flat delta diagonal structure. As the position quickly moved in favor, I scared out multiple times. First after a strong one-day gain and later following the market's reaction to the FOMC meeting. By gradually reducing exposure and locking in profits, the trade finished with a total gain of $480. Let's look at the recording. Let's look at the daily chart of SPX on the July 10th expiration. This is where I opened the position yesterday. Yesterday the market went around the P1, the 7300, and I had the assumption that the market might be able to bounce back from these levels, and this is exactly what happened for today. And right now we are at HVL, so this is kind of a regime pivot, regime change, and we will see what will happen. And since tomorrow is the SpaceX IPO day, I don't know what will happen, so I wanted to scale out from the position. And let me show you what I did yesterday. This was the yesterday trade. I opened it for 125, standard 5-point diagonal spread, call diagonal spread on the upside. And I opened this yesterday when the market was around very close to the market close. And what I did today is sold half of the position for 170. It was a very nice increase in one day. So you will see this screenshot of my fear. So this is the fear from today and this is the fear from yesterday. You can also see the timestamp of the executions or the screenshots. It was yesterday and this is for today timestamp. And so the half of the position is already scared out, and it means that I will have a lot less risk on the downside, and on the upside I still have risk, and I am waiting the SpaceX IPO day with a flat delta call diagonal position. And you know, anything can happen tomorrow, but yesterday the market reacted to P1, and right now we are at the regime pivot, the HVL line, and who knows, market might be very bullish or very bearish. I have no idea what will happen on the SpaceX day. And that's why I wanted to scale out from the position. And if you're looking at the other options metrics, the absolute GEX is pretty high at 7400, but the volume is also very intense on the upside. Look at these net volume columns. And these are pretty bullish distribution, but on the other side, we also have put volumes on the downside. So this market is kind of two-sided market, and everyone is trying to speculate what will happen tomorrow. We will see. That's why I wanted to take risk off the table, because I have only control over the risk management, nothing else. I will not know the future. I will not know what will happen tomorrow. The only thing I am in control of is how I manage risk. That's why I wanted to scale out from the position and take some money off the table, especially after a one-day very nice increase from 125 to 170. So this is the current state. I will continue from here. It's the 17th of June and we are still on the daily chart of SPX that the market reacted negatively to the FOMC meeting. It was the first meeting of Kevin Walsh, and obviously the interest rate did not change, but the tone and the reaction to the press conference was a little bit bearish, because he said that it's out of the question that this year there will be an interest cut. So this is not a good news for the market, obviously, and we filled the gap. On the daily chart, we are below HVL and we are in negative gamma territory. And that's why I wanted to scale out from the position a little more. So what I did is I sold 1/4 of the original position for 150 and still left another quarter in the position to see where it's going, because I still have a lot of days until expiration. And here you can see the screenshot of my fill. As you can tell from the risk graph, the maximum I can lose on the downside is around 30 bucks if I let the whole structure expire worthless. I still have potential risk on the upside, that's obvious because of the core diagonal nature of it. And it's still a little bit negative delta, so I will have to monitor this position and how to adjust it further. But right now we are in a negative GEX zone again. This can also be a technical test and technical gap fill in here, and let's see what the market is doing in the next couple of days. Based on the net volume, it's kind of a little bit bearish, and also the net GEX on the put side is much higher because we are below the HVL, and the absolute GEX level is this level, and we have to watch the momentum there. What's happening there? It can be a reaction zone. So this is the current state. I will continue from here. Yesterday we got FOMC, and today the market is gapping up but going nowhere. It's hovering around the HVL line. And since I am traveling next week, I decided to close the other quarter of the position because I didn't want to deal with this position next week if I had to adjust, if the market keeps going higher and it goes into the risky territory. I don't want to mess with this position, so that's why I closed the other quarter for $170, and here you can see the screenshot of the fill, and all in all it became a $480 profit. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.